Welcome to this explainer. Today, we're diving deep and honestly, we're going to shatter some of the most common assumptions out there about crypto. We're looking at the actual, on-the-ground reality of USD coin, or USDC, in the modern financial landscape of 2026.
So let's just be real for a second. Did you click on this explainer hoping to find a lottery ticket? Looking for that secret, undiscovered coin that's going to double, triple, or 10x your money overnight? Well, if you are, we kind of need to adjust your strategy right here, right now. Because the asset we're looking at today, it represents a massive paradigm shift. It's playing an entirely different game than the wild speculative tokens that usually dominate the headlines.
Think about it. When people buy Bitcoin, Ethereum, or your standard altcoins, they're usually buying into price speculation, right? They want that line on the chart to go up. But USDC operates on a completely different playing field. Since it's a stablecoin, its absolute core design is price stability. It is specifically designed to maintain a perfect one-to-one price peg with the United States dollar.
And that means the absolutely crucial number to remember here is $1. You don't buy USDC expecting it to hit $2 or $5 or literally ever go to the moon. You buy it because it is engineered to flatline at exactly $1. For every single USDC minted on the blockchain, the issuer, a company called Circle, holds $1 real in reserve. That's usually a mix of cash and short-term US Treasury bonds held in regulated financial institutions. So, if the price never goes up, you're probably wondering, why on earth is anyone buying it? Well, to understand that, we need to take a quick look at its journey.
Because, USDC wasn't just born yesterday. It was launched back in September of 2018 by the Center Consortium, which was this joint venture between Circle and Coinbase. And it was built to be a safe haven from crypto volatility. Traders desperately needed a way to instantly swap out of crashing markets without dealing with the agonizingly slow delays of traditional bank withdrawals. Now, it hasn't always been perfect. It faced a massive stress test in March 2023 during the Silicon Valley Bank collapse. Circle held some reserves there, which actually caused the coin to temporarily drop to 87 cents. It was scary. But surprisingly, it repegged to $1 almost immediately. And honestly, that quick recovery paved the way for a massive boom. It grew to a $53 billion market cap by January 2025, and then hit an incredible $76 billion by December.
Which brings us to Section 1, 2025, the year of mainstream adoption.
This was the pivotal era. This is when USDC transformed from a mere trading tool into a genuine global payment powerhouse. While your standard cryptocurrencies were experiencing these stomach-churning price swings all throughout 2025, USDC surged by nearly 40% in market capitalization in just 12 short months. And what that did was prove, beyond a shadow of a doubt, that blockchain technology isn't just for speculation anymore. It's actively being used to move real, tangible money at a massive scale.
The entire narrative in 2025 completely shifted from just crypto trading over to global payments. We are talking about literally trillions in global transaction volume. Visa significantly expanded its stablecoin settlement support using USDC, cross-border transactions absolutely exploded, and a huge driver of this was users in emerging markets. They were using USDC as a digital refuge, a way to protect their hard-earned wealth from devastating local currency inflation. Plus, despite all the market chaos of 2025, USDC maintained its $1 peg remarkably well. We're talking an average annual deviation of just 0.05%. To put that into perspective, you probably lose more value in loose change slipping under your couch cushions. This unshakable stability really solidified its dominance as the highly regulated alternative to its main rival Tether.
All right, let's move into Section 2, the profit pivot, generating yield.
So if the price stays at $1 forever, the traditional buy low, sell high trading strategy completely goes out the window, right? To really grasp this, think of holding USDC like a high-yield savings account or maybe a certificate of deposit. You aren't looking for capital appreciation here. Your focus is purely on generating yield. And investing in USDC in 2026 works exactly the same way.
But where exactly does this interest come from? Well, it comes from DeFi, decentralized finance. These are peer-to-peer financial protocols alongside centralized lending platforms that exist entirely on the blockchain. Think of these platforms as essentially automated marketplaces. It's where you can put your crypto assets to work, completely cutting out the traditional banking middlemen.
And by interacting with DeFi, investors right now are earning annual percentage yields that frequently range anywhere from 4 to over 10%. It's wild. You can do this by lending out your USDC to borrowers who actually pay interest. Or you can provide liquidity to decentralized exchanges like Uniswap, essentially earning a cut of the trading fees. Or you can engage in staking. These mechanics unlock yields that traditional brick-and-mortar banks, the ones still offering you fractions of a percent, simply cannot match in 2026. This is exactly where your profit comes from.
Now we absolutely need to talk about Section 3, the hidden risks and losing your capital.
Okay, so while you can't lose money on price drops in the traditional sense with USDC, you absolutely can lose your capital if the underlying system breaks. This is what we call counterparty and depeg risk. Remember that Silicon Valley Bank collapse in 2023 we talked about earlier? That caused a very real depeg down to 87 cents because the money backing the coin was temporarily in jeopardy. But more importantly, when you chase those high yields by lending your USDC to a DeFi platform, you are taking on real risk. If that platform is poorly managed, if it goes bankrupt, or, and this happens, if a hacker exploits its code, your entire investment can literally vanish in a matter of seconds.
Which brings us to Section 4, the 2026 verdict, the bull versus the bear case.
Let's lay it all out. On the economic front, the bull case is that USDC is the ultimate market safe haven with massive high yield potential. But the bear case? Well, because it's tied directly to the US dollar, standard inflation is actively eating away at your purchasing power if that money just sits idle. Then, looking at utility, the bull case points to frictionless money. You can send $10,000 across the globe on a Saturday night using networks like Solana or Polygon, taking seconds and costing fractions of a cent. That's a game changer. But the bear case points out the centralization risk. Unlike Bitcoin, USDC is controlled by a private company. Circle legally has the technical ability to blacklist your address and freeze your funds if they're compelled by law enforcement. Finally, system trust. Bulls love that Circle provides highly transparent monthly attestations from independent auditors like Deloitte. Bears, however, warn of incoming regulatory crackdowns from the US and the EU's MiCA framework, plus that ever-present danger of devastating smart contract bugs in DeFi.
So ultimately, it comes down to this. USDC is not a vehicle for massive wealth generation. It's a utility tool, and it's a yield-bearing asset. If you're an active crypto trader, holding a portion of your portfolio in a stablecoin like this is practically mandatory so you can lock in profits and buy the dips. And if you're seeking passive income, those yields are undeniably attractive. But you have to remember, investing in USDC essentially trades price volatility risk for counterparty security risk.
So I'm going to leave you with this final thought to ponder for your own 2026 portfolio strategy. You've seen the incredible speed, the massive global adoption, and those really tempting double-digit yields. But you also know about the hacks, the centralization, and the history of depegging. So tell me, in 2026, is the high yield of decentralized finance actually worth the risk of the unknown? Thank you so much for joining me for this explainer. Keep learning, and I'll catch you next time.
Thank you for watching this video. Please subscribe this channel.